I've been saying it on my X account. Potentially something big is going to happen to the precious metals market in the next 6 months, a year, maybe a year and a half. I don't know. But as me and you both know, Mario, when things like that, when, you know, historical events happen, when, things that happen that changes the game fundamentally, the people who are in the inside would basically, have early access to information.
Echo 64, home of alternative economics and contrarian views. I have the pleasure of speaking with Eric Yeung, our friend from Hong Kong, aka King Kong 9888. Hi, Eric. Nice to have you on.
Thank you, Mario. It's nice to be here.
Great. Recently, you posted something on X, interesting about Comex and the EFP, and that's one of the reasons why I wanted to bring you on. But a little later, after I contacted you, I saw this article. Actually, someone, I think it was Jan Neuenhaus, he posted it on X, and I clicked into this article in the FT, which, well, I subscribe to the FT even though I don't like the publication. But Eric, the old Sun Tzu saying that you need to know your enemy and keep them close. So the article is really interesting. It's the gold market is too important to be left to private clubs. The institutions underpinning the trading and storage of the precious metals remain opaque and underregulated. By Bernhard Schnellmann. It sounds German, and it says here the writer has worked in precious metals markets since 1978 and is a former director of Argor Heraeus. I think they're one of the biggest refiners, bullion refiners in Germany, actually, if I'm not mistaken, Eric. And I sent you this article, and before I let you chime in, just want to read this part that I highlighted here for you and the viewers. It says the European Central Bank recently warned that under extreme events, the gold market poses financial stability risks. It said vulnerabilities have arisen because commodity markets tend to be concentrated among a few large firms, often involve leverage and have a high degree of opacity deriving from the use of OTC or over-the-counter derivatives. Disruptions in the physical gold market could increase the risk of a squeeze. It's interesting, Eric, that he says gold market poses financial stability risks. Well, I would say that's the bucket shop, Ponzi scheme, LBMA, Comex gold market that does, not real physical gold, because when there's financial instability, you want gold. So that in itself doesn't make sense, but I'll let you now chime in. You've read the article as well, and then we'll move on to the other topics in a minute.
So I find that, Mario, I find that article really interesting because he talks about the LBMA and the LPMCL, which is the clearing firm for the LBMA, right, in London, for local London gold and silver. So he admits that number one, well, it's common knowledge, right, that gold and silver's contracts at the LBMA are bilateral, meaning that it's a business arrangement or like a transaction between two parties where the LBMA has very little say, very little governance of those transactions. And then, like you said, he goes on saying that there's leverage risk, etc. Doesn't specify where, but he's talking about the LBMA, right? Like the whole article, he's talking about the LBMA and the LPMCL. So I would think that he's essentially saying what David Jensen has been telling us all along, that, when a insider or a bankster or whatever, um, you know, keeps telling us that when the bullion banks um, exercise concentrated short positions at the Comex, but they are hedged at the LBMA with these, you know, quotation marks, physical gold and silver. Essentially, that gold and silver at the LBMA simply just paper promissory notes. Okay. So I think like this article, in my opinion, confirms what David Jensen said. Because he's basically describing the leverage risk and structural risk at the LBMA as a legitimate hedge to these bets that the bullion banks are placing at the Comex.
Basically, this article in the FT, which historically has been a pretty gold unfriendly publication, as I've talked about many times, basically vindicates the conspiracy theorist gold bugs, right? Because you were telling me before we came on, and I'm not going to mention names, that David Jensen was attacked by this former bullion banker, saying that he didn't know what he was talking about. And I sent this article to David Jensen because he's been interviewed by me a few times, and he told me the history of the LBMA, that it was created back in the 80s when the UK had when Margaret Thatcher deregulated the city of London. It was called the Big Bang, and the LBMA was created to trade gold in London. But what David Jensen is looked into is the fact that the LBMA actually and the Bank of England, they leave the bullion banks alone. I think David Jensen even said that it's like the Old West. It's unregulated. And this guy in this article, and this guy has been in business I mean, in the gold business since 1978, he says the same thing. So I think it's really interesting, and they are concerned, especially the ECB. That warning of the ECB came out about a month ago. And with that, Eric, could we move into the post? Which was the reason for which I wanted to interview, and I'm going to share it here before I let you talk about it, because most people think that the Comex and the LBMA are completely separate, but they're not. They're like tied at the hip. And I'll let you read this post, and then you can talk about it.
So Comex gold and silver eligible and registered vaults are filled to the brim. Combine this with the fact that gold and silver lease rates spiked up from time to time, means that whoever own the physical metals at the COMEX eligible and registered vaults are not allowing the physical metals to flow back into the system. So think about why that is. Physical metals always flowed back into the system in the past, and that's how they nuclear slammed the gold and silver prices in the past.
Very interesting. And why do you think this is happening now? And let's bring up some of these numbers. Like I think you sent me here the lease rate so people can see it. There's the lease rate is that the one here for gold?
For gold, but not for silver, because the silver one, it seems like only the insiders have access to.
Yeah, yeah.
Even Nick told me that like he's not able to get it, but
Mm,
you can see the gold ones here. It doesn't show like those daily spikes, but as we all know, this year, even the goldies race spiked up from time to time, right?
yeah,
When there were shortages
yeah.
at the LBMA. Um,
So
anyway,
why do you think this is happening? Why? And who do you think is I mean, I think there are some Comex data that show who's holding all that. It's probably the bullion banks. Why do you think that's happening now?
Well, the experts, the insiders, they've been accusing the dislocation, that's what they call it, um, as a result of the potential tariffs on gold and silver. As we can see now, after what, 6 months, and Donald Trump even came out and clarified it, that gold is not to be tariffed. And silver as a industrial metal, as a strategic metal, I don't see them, slapping tariffs on it. So I don't know how much of that theory holds water. What I think is happening is that, I've been saying it on my X account, potentially something big is going to happen to the precious metals market in the next 6 months, a year, maybe a year and a half, I don't know. But as me and you both know, Mario, when things like that, when, you know, historical events happen, when, things that happen that changes the game fundamentally, the people who are in the inside would basically, have early access to information and they front run the situation. So my theory is that this incredible, run on precious metals at the Comex, I mean, like, at the LBMA, and the Comex is sucking all this in to the votes for the last 6 months, 8 months, etc. My theory is that somebody in the know is front running whatever that is going to happen in the future. That's what I think is happening.
Yeah, and I remember Eric in the beginning of the year in January that article came out in the FT saying that LBMA spot delivery was like delayed to up to 4 to 8 weeks. And I mean, I spoke to you and I spoke to Clive, and at the same time, Warren Buffett and Berkshire Hathaway, they've got like a third of $1 trillion in cash, more than half of their assets. And we speculated that whether it could be Warren Buffett or Berkshire Hathaway buying gold, or whether it could be the U.S. Treasury. And some people might ask, why would the U.S. Treasury buy gold if they've got 8,133 tons? Well, it's because if you've been listening to channels like mine and others in the precious metals, sound money space, we've told you for years that a lot of these central banks, they lease out the physical gold to the market in order to keep prices low. The problem is now with prices going higher and more problem with the U.S. debt. And we saw Eric, in the beginning of this month, even the Federal Reserve Board, some guy wrote an article about revaluation, which is something they rarely ever do. So I think it could either be some big investor like Berkshire Hathaway or even the Treasury. Why would the Treasury need to buy it? Well, they have to bring the gold back that they leased out. And that could be one of the reasons why. Yesterday, Secretary of the Treasury Bessent was asked about revaluation of gold, and he said, "Oh, I doubt that will happen." I mean, if it wasn't going to happen, he would have said, "Well, that will definitely not happen." So I want your take on that, and maybe you could uh, talk a little bit about these charts. I mean, they clearly show that this year Comex warehouses have gone through the roof, right?
Yeah. So number one is what they say, Mario. They say that never believe anything until it is officially denied. Right? So maybe that's it. That's the cue right there, right? In terms of the charts the wonderful charts that we have here from Nick Laird, okay, for the Comex eligible and registered vows of gold and silver. As you can see, we had that spike in 2020, right, of gold and silver inventory, and then it kind of drained, and that drain coincided with the gold price correcting, silver price correcting, and going sideways for 2 years. And then, last year, 2024, we started seeing that huge spike up. That's when the COMEX started really sucking in physical gold and silver. A lot of it, like I discussed with you and Clive, were from the LBMA. And like I said, the interesting thing is that the physical gold and silver at the eligible and registered vaults at the COMEX right now is still at high levels. So unlike last time, it's maintaining their inventories at high levels. Now, my friend on XPM Buck have made this observation with numbers to back it up. I don't have it in front of me right now, but essentially what PM Buck have found out is that over the last 6 months, even though you see on the chart, it looks like the gold and silver at the COMEX and the LBMA, maintained themselves at a fairly high level. Didn't really drain, right? But in fact, there were a lot of entities physically withdrawing physical gold and silver from the COMEX. So that's amazing, isn't it? What that means is that even though the COMEX gold and silver vaults are filled to the brim, for this whole duration in the last 6 months, there have been people, authorized participants, essentially, standing for physical delivery and withdrawing metals from the COMEX.
Yeah, the
So
reason why,
yeah,
sorry,
sorry,
I
go.
just interject there a little bit. The reason why it's amazing, some people might be asking, why is it amazing that people are withdrawing the physical gold and silver from COMEX? Well, it's because usually it doesn't move away from the vaults, right? It stays within the vaults and it's just transferred between JP Morgan and other actors in the COMEX exchange. But yeah, so please continue.
I was just gonna say it's extra amazing, Mario, because normally if there's a lot of withdrawal, the physical gold and silver levels at the COMEX would drain, basically, will go lower. But this time, as authorized participants are withdrawing a lot of physical gold and silver from the COMEX, as you can see on the chart, its vault levels are still at the highs. That means whatever that these parties are withdrawing from the COMEX gold and silver registered and eligible vaults, whatever that is being taken out, the COMEX is filling it right back up to that high level. So that's what I mean by extra amazing, right? So what we see on this chart right here is not a full picture of what happened in the last 6 to 8 months in terms of physical gold and silver imports into the US.
So what's really also interesting, Eric, about this withdrawal of physical and the fact that it's not making a huge dent on the COMEX eligible and registered warehouses is that normally, let's say back in 2021, if the people who were doing the Silver Squeeze campaign, if they try to do that and they took a lot of silver out and withdrew from COMEX, the regulator would be right on top of them and they would stop them because I don't know if you remember Rafi Faber and a few other people tried to withdraw just one 5,000-ounce bar from Comex of silver, and they made it really hard. But here we have someone taking tons of gold withdrawing. So to me, it shows that they're highly connected, i.e., maybe Warren Buffett and Berkshire Hathaway, or the top dog, which is the U.S. government.
I agree with you, Mario. It's like you said, it looks like nobody is stopping nothing, and the drain is just, really consistent on a monthly basis. So from that, like I said, I agree with you. I think it must be, either U.S. government proxies, like I said, 6 months ago when I was on your show with Clive, or just people who are close to the people who are actually making decisions on this, right? And they are front running whatever that is going to happen in the next 6 months, a year, etc.
Yeah, definitely. And what else? I mean, we've had a consolidation in the price of gold for since April. Silver is still having a tough time for now, staying, going above 40. What do you see going forward in the next couple of weeks? Even though we should focus, of course, on the long-term fundamentals of gold and silver, I'm still stacking. And I think the other thing, Eric, is the miners seem to be holding up quite well these days whenever there's a price drop in gold and silver, which is encouraging.
Yeah, the miners, they're interesting because they don't really react super super well, um, especially after the dump in 2021, right? They haven't really reacted super well when the gold and silver prices spike. But what I've noticed is that when the 50-day moving average or the 180-day moving average, when they move up, then the miners start reacting. Now, you might ask me, why is that? Um, well, Jordan from Daily Gold, he explained it actually recently, right? And I'm going to just paraphrase what he said. Um, these all these miners, they make money not from a spike of gold and silver prices. You have the gold and silver prices have to be sustained at a high level for them to actually enjoy the benefits of these high gold and silver prices. So, you know, to put it simply, when gold and silver prices spike, that's all nice and dandy. But if you can't keep it up there, right, then the miners, I'm guessing now whoever is buying the miners is the smart money, right? They look at it and they say, that's nice, but we need the, 180-day moving average to go up so that these miners can actually, have these high gold and silver prices reflected on the balance sheet. And it's just happening, right? Like, I mean, I'm not making it up. You look at Newmont, you look at most recently First Majestics, all these companies are having really good quarterly results. So as a result, their share prices go up. Okay. So I think as long as there's no liquidity implosion, like a liquidity plunge, like in March 2020, I think miners are probably going to do well going forward.
I agree. And before we wrap up, do you want to take a guess? Because we're doing this interview actually on Friday, August 15th, and we have this summit between President Trump and President Putin. They're meeting in an Air Force base outside Anchorage, Alaska, Eric. And do you think it could impact the price of gold? And I know we could look really silly speculating on what could happen, but why not? What do you think?
I think what's going to happen is Donald Trump, being the incredible showman that he is, he's going to claim victory no matter what happens in Alaska. So no matter what happens, Donald Trump won and the US won. Okay? Like, when I use this, term winning or won very loosely. Okay, so he's going to claim victory no matter what. And when that happens, I think gold and silver are going to get dumped. And then once I guess intelligent people realize that we have all been duped, that nothing really changed materially because all parties involved are still clinging onto their existing positions, right? Like, for example, what I heard is that Russia wants the US to recognize their eastern territories of Ukraine that they occupied, right? I mean, like, how likely is that going to happen without the objections of Ukraine and the UK and the EU, right? So like I said, just step back a bit. I think once all the information get digested by calm and rational people, gold and silver is going to bounce back up. But initially, I expect a dump in gold and silver prices.
Okay, Eric, thank you very much for your time. And it's always great to talk to you. And I wish you all the best.
Thank you, Mario. Have a nice day.
You too.